For cash flow statement, it can be a direct method or indirect method. So, accountant has to form a accounting policy and apply it in preparation and presentation of financial statements. What accounting standard 1 says for this? Consideration in selection of accounting policies. There is a primary consideration and a major considerations. What is primary consideration? Primary consideration is financial statements should represent true and fair view. And what are the major considerations in achieving the primary consideration? That is, financial statement should represent true and fair view. Those major considerations are prudence, substance over form, and materiality. What is prudence? Prudence says all the losses should be provided and profits should not be advanced. It means whenever any event or any transaction is occurred, then only those profits should be recognized with certain conditions, and any losses or risk which is seen should have a provision for that. One should make a provision for that. That is called as prudence. One more point in prudence: the assets should not be overstated and liabilities should not be understated. Similarly, profits should not be overstated and losses should not be understated. The second major consideration is substance over form. It means for any kind of a transaction and of it and its accounting, accountant should consider the legality, not only the legality of that transaction but also the substance in it. And the third point is materiality. If any transaction or any point is a material one which may change the decision of accountant while choosing the accounting policy, then that point or that event or transaction should consider. So these are the three major considerations in choosing the accounting policy which will fulfill the primary consideration, that is prudence, substance over form, and materiality. So AS1 says disclosure of accounting policies. To disclose the accounting policy, first the accountant has to form an accounting policy. He needs to choose the accounting policy based on these three major considerations, that is prudence, substance over form, and its materiality. And while choosing that accounting policy, one should consider that a financial statement will show true and fair value of the transactions or the business transactions. And there is one more point which need to be disclosed in accounting policies. There are certain fundamental accounting assumptions. If those assumptions are not followed, then that needs to be disclosed in financial statements under AS1. What are those fundamental accounting assumptions? Going concern, consistency, and accrual. What is going concern? Going concern means the enterprise is going to continue its business, it's going to run its business for a foreseeable future. There is no planning or no discussion is going on closing down the business or operation of that enterprise. Then the second point is consistency. So whatever accounting policies are decided should be consistently followed year over year or a accounting period over accounting period.